Turn now to our GMA cover story, and the amateur day traders taking certain stocks to new heights during the pandemic. But there are lots of risks that go with those rewards, and our chief business correspondent Rebecca Jarvis is here with the details. Good morning, Rebecca.
Good morning, George. That's right. This is a trend that has exploded because of the pandemic. A new generation of investors. They are young, they are stuck at home with not a lot to do, and they have trading tools where they can do it for free all day long from the palm of their hand on their phones. And they have a community on Reddit where they can all band together to try to force stocks higher, at least for now.
They're young, internet savvy, stuck at home during a pandemic and looking to beat the odds. No, they aren't your typical Wolf of Wall Street guys.
At the tender age of 22, I headed to the only place that befit my high-minded ambition.
They're a kind of amateur day trader, and their impact on stock prices has been huge.
What we have is the perfect storm of stimulus money, a cohort of younger investors, and we also have these platforms that encourage sort of these weapons of mass trading. It creates, if you will, this explosive upward effect.
Cameron Bublick is a 20-year-old Rutgers student who's been playing the stock market during the pandemic.
Every day when I wake up, I check, first thing I do is go on Robinhood and check out the app.
Using the Robinhood app, where he trades as much as he wants without paying fees, Cameron and others like him have taken the value of stocks in companies that traditional Wall Street investors are largely betting will fail, like GameStop, BlackBerry, and AMC Entertainment, to unthinkable heights.
How do you get your ideas about which stocks to buy?
A lot of it, to be honest, is very impulsive. A lot of what people do is basically, gambling on this.
He also gets ideas about which stocks to gamble on through a community on Reddit called Wall Street Bets, followed by nearly 2.4 million readers who spend 24/7 talking about stocks of companies like GameStop. The posts include everything from satire to strategies like bankrupting institutional investors for dummies, featuring GameStop. The hope is that they can drive up the price of a company and then cash out.
They're pulling it up by posting about it, more people buying it. Do I think that GameStop is worth, $220 a share? No. I know personally near where I am, I've seen probably 4 or 5 GameStops shut their doors within the last year. The stock's only worth as much as people think it is.
Their efforts to game the system sometimes pay off. A year ago, GameStop was about $4 a share. Yesterday, it closed at nearly $150 after surging almost 100%.
You saved up and you put the savings into GameStop. And you're smiling.
I made money on it.
While Cameron won't say how much money he put in, he believes he made thousands of dollars on the trade.
A lot of my friends and I, we do it together. It's kind of almost like a game to me. I love to be up. I get upset when I'm down, obviously.
In the process, Cameron and the army of people buying GameStop shares have caused serious losses for some traditional Wall Street speculators. Now, a handful of industry leaders are calling for an investigation because of the angry mob that's formed against them. This game, perhaps as entertaining as it is risky.
Well, I would approach it the same way you approach it going into a casino, and that is you're not investing, you're gambling. And the history of people building economic security through this type of trading activity is pretty rare.
Even those playing seem to know the odds won't always be in their favor.
I've seen people lose their life savings or college funds, not be able to pay their loans off. I never want to put myself in that position.
Proceed with caution. And this is not exactly the first time we've seen this type of euphoria in stocks. I'm reminded of the late 90s, early 2000s in the internet bubble. Back then, there was no Reddit or Robinhood app, but there were Yahoo and AOL chat rooms. And George, people would talk about stocks in those chat rooms. There could be a frenzy. And the end of that story, it didn't end well for many of them.
And Rebecca, your piece helpfully made the most important point. This is gambling. Much more than it is investing. So what's the most important thing that people need to know about it?
Yeah, George, the difference between saving for retirement and this, they are night and day. If you're saving for retirement, that is thinking about it over the long haul. Remember that when you invest in an individual stock, it can be very risky. These types of things, it's a good idea if you're getting involved in it at all to make sure that you have a limit on the amount of losses that you're willing to do. Just like if you walked into a casino tomorrow, the amount of money you'd be willing to lose. And finally, the new apps that have been created for trading, proceed with caution. caution on those as well. They are meant to gamify, to make trading fun. Sometimes that fun can turn very costly very quickly, George.
Important cautions there. Rebecca, thanks very much.
Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.